started. I don't want to tie everybody up for Saturday on Labor Day, but let's get started. So again, my name is Dave. I'm with the Compass Options Trading Room and Compass Alert Service. I trade mostly options. I do trade some stocks from time to time, and I'll go over our strategies in the room. I've been doing this professionally for 14 and a half years, and I've had the trading room here at Right Line Compass Options Room since January 2022. So 2.5 years, and been very successful in it. Have a lot of members in there. I'm in there every day, market open to market close, and have had a lot of people in the room like that actually started in January 2022 with me, and is still there. So I'm very proud of that. So again, let's go ahead and get started. So again, this is what we'll be talking about today: the options room, the alert service, and basic options. We're going to spend some time on basic options. All right, so just a couple of graphics here. I have something called the SPY Super System, a piece of software that I'll show you called the Compass System, and I'll show you a SPY Super System that I trade. SPY Super System is actually just the methodologies that I use to trade SPYs, Qs, and IWM on quick intraday trades off a 5-minute chart. We'll talk about that as well. All right, so first thing I have to do, of course, is get the disclaimer out of the way. And all signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so I will not be giving financial advice. All right, so we'll get started here. If you have any questions, by the way, if you put your name and phone number in the chat box or in the question box, or your Skype username, the questions I can't answer, or you need more details from Right Line, Rory will give you a call back. Typically follows up very quickly. He's just going to call you one time. He's not going to try to pressure or anything. He'll just call you to answer any questions that you might have. And again, anytime during the presentation, you can do that. All right, so this is just kind of a graphic of the SPY Super System. This is the Compass System on Thinkorswim that I use, and I'll show you that as we get into that. It's a piece of software that tracks institutional trading, and that's, as you're going to hear from what I have to say, knowing when the institutions are in a trade and when they're not is the key to being a successful retail trader. All right, and this is just a graphic of what the alert service looks like. The alerts are sent out, SMS alerts to your phone. I do this with very high probability trade setups, and I'll talk about that for folks that can't be watching the market all day or at work and want to be able to make some money trading. First thing I want to cover, and I cover this in every single one of my webinars, is to understand what actually moves the market, what drives the market. And the market consists of two groups. It consists of retail traders such as myself and most likely all of everybody here. We're retail traders with these little bitty marbles here. And it's important to understand that we as retail traders don't impact the market. We can't drive trends, stop trends. We don't have anything to do with actually the overall market moves. And when we're in the market trading as just retail traders without institutions, and this is the institutions here, when we're in the market and institutions are not in the market, or not in there in a significant way, then we end up with just chaos and chop. That's what you're going to get. You're going to be very difficult to make any money without institutions in the trade. This is the institutions. Now, institutions are made up, most people understand, they're made up of investment banks, Morgan Stanley, JP Morgan, Goldman Sachs, HSBC, all the big banks are part of the institutions. They have trading desks, and they also have algos. Very important to understand that most trades that are done in the market today are done by computer. The computers are called algos. The institutions have these algos, and there's a lot of different kinds of algos looking for different kinds of setups in the market to use. So this is what institutions are. Now, the institutions also include pension funds, big, huge pension funds, police pension funds, fire pension funds, state employee pension funds, billions of dollars in there. Then there's hedge funds, hundreds of hedge funds that also have lots and lots of money to trade. And finally, you also have mutual funds, Vanguard, T. Rowe Price, billions and billions of dollars. These are the folks that when they are trading, pushing trades, this is the one we want to be able to identify. So when the institutions are in there, we want to know when they're in there. And when they're not in there, we don't want to be in the trade. We want to basically bypass any trades that the institutions aren't in. And keep in mind that when we're trading as a retail trader, we're going to take money away from other retail traders. We're not going to take money from the institutions. Don't think about that. Don't think you're going to, you're not. We just have better information, better tools. We come more well armed to trading than the other retail traders. Therefore, we're going to take money from them. Question here. Are we able to offer a lower priced alert service for the SPY queues and IDM for your SPY super service? Other ETFs rather than stocks? You know, listen, I'm going to get into this, Matt. The SPY super system is very specific in it. I can't do alerts on it because it's much too quick, as I'll show you. I call out the SPY super systems. We talk about that in the room, but you can't alert on it because by the time the alert comes out, the trade's over. So, so you would find that being in the room is where you're going to get the information on the SPY super system, because that's where I go over those. So I'll cover that as we get into it. All right, now we do have in the room and on the alert service, we have rules to trade by. Pretty simple. They sound easy. Trade the best and skip the rest. Everybody wants to trade the best and skip the rest. They think they do. They don't. A lot of people want to trade just to trade. So they take trades that are not the best trades. In fact, most retail traders have no idea how to identify what the best trades are and what trades are not the best trades. But this is what we look for. And this is, if you're in the alert service or in the room, this is what you're gonna know about. You're gonna know about which are the best trades and which ones to skip. So again, this is important. Our objective is not to make trades. And I say that because our objective is to make money. I say that because a lot of traders feel like this as traders. They're sitting in front of their computer. They got to have a trade on all the time. That's not true. A lot of times, no trade's the best trade. In other words, not taking a loss is better than being in a trade and taking a small loss or a big loss. And so you're better off out of those kind of trades. So that our objective is not to make trades. Our objective is to make money. And as a profitable trader, as a retail trader, we need an edge over other retail traders. The edges that we have is we use the right line compass system, which I'm going to show you. This is a piece of software that runs on Thinkorswim or Ninja that basically identifies when institutions are in a trade and when they're not. And that's really, really important, because I'm not going to get into a trade that I'm going to try to take for a long term during the day or overnight, or a swing trade that I'm not following the institutions. I'm not going to trade against the institutions. Then we also trade what's called relative strength and relative weakness. Now, relative strength and relative weakness does not mean RSI. Relative strength and relative weakness is how your stock is performing versus the SPY, the S&P 500, 5-minute candle by 5-minute candle. If the S&P is going sideways and down and your stock is going up on 5-minute candles, then you have relative strength, and vice versa with relative weakness. And then we trade with the market trend if there is a market trend. And then we also try to buy near support and sell near resistance. We don't chase stocks as they rip up or rip down. You're much too likely to get trapped at the top and trapped at the bottom. One more question here. Do you need Thinkorswim to have this? You need Thinkorswim to have the compass system, which is what I use to identify SPY super system trades. But you don't need to trade on Thinkorswim. Thinkorswim is, I don't trade on Thinkorswim. I have the Thinkorswim platform that I put the compass system on. And that's where all my indicators come from. But I trade off Tradier using a front end called TradeHawk because the commissions are so low. So you don't have to trade on Thinkorswim, but the compass system will run on Thinkorswim. The Thinkorswim is free. Yeah, if you want to get the Thinkorswim and just put the platform on there, they don't charge. I don't think they charge anything. They might make you keep $100 in there or balance or something. I don't think so. But yeah, you'd have to check with that. But no, you don't pay for Thinkorswim. The compass system you pay for, but you don't pay for Thinkorswim. Okay, so this is what the compass system does. This is kind of a graphic of it, and we're going to see a lot of these charts, so you'll get to understand what these indicators are. But the compass system identifies the highest probability trade setup, while sidestepping setups that look good but will fail more often they succeed. And this is critical. Sidestepping trades that don't work is probably more important than finding good trades, because cutting your losers really makes a big difference. In other words, cutting them don't even be in them. And this compass system does this by identifying when institutions are driving the move and when they're not. And I'll go over the criteria that we use a little bit later on here. And the Compass System software analyzes complex trading data and displays the results in easily identifiable visual formats. This visual element makes it possible for even new traders to find high probability trades. Okay, you're not from the USA, so you can't get Thinkorswim. Yeah, you probably can get Ninja, and Ninja, the Compass System, which is called the Money Flow Tracker, will also go on the Ninja platform, which you can use over there. Or if you don't, I mean, if you're in my room, if you're a member of my service, the Compass System is going to be up there on the screen all day long, and I'm going to be talking about any particular trades that you're looking for, stocks that you're looking for, and we'll be talking about the SPY super systems all day long, right off of the Compass System on my platform. So in the trading room that with me, you always have access to it, even if you can't get it yourself. All right. So this is how we get an edge over retail traders. We're only taking trades that are being driven by institutions. This is the number one thing. This is very important. We take trade stocks that have relative strength or relative weakness to the SPYs and the Qs, and we trade in the direction of the overall market. With these three criteria right here, you're going to have a very high win rate. I mean, I don't know what your win rate is now. You know, mine is between about 85 and 92% month after month, and that's by just taking these particular things as a starting point. This starting point right here is going to give you a very high win rate. This gives us an edge because our trades are going to be supported by institutional buying and selling. The stocks will be outperforming the index, the SPY, this relative strength, relative weakness, and the stock's going to be moving in the direction of the overall market. So that's how we get an edge over other retail traders. Now this is basically what I call a basic high probability trade setup funnel. You know, it's not a real funnel. This is a thought process I go through when I'm looking at stocks to determine if they're potentially high probability trade setups. The first thing I look at is I always look at the daily chart on the stock that I'm looking for, and then I look at the 5-minute chart. If the daily chart, if I want to go long and the daily chart is not bullish, I'm not going to take it. Daily chart must be bullish for me to go long. And then I look at the 5-minute chart and find a good bullish entry on it. So this is important. I'm not going to trade against a stock that has a daily chart that goes the other way. In other words, if I have a long, I'm not going to trade any daily chart that's bearish. Now, I trade with the trend with both stock and market if there is a trend. A lot of times there hasn't been any trends. Get a lot of chop, but I trade with the trend. Then the third thing is the compass indicators have to align. I have to have the indicators telling me that the institutions are bullish if I'm going long and the institutions are bearish if I'm going short. If there's neutral, then I'm not going to trade it. I need to have the institutions in the trade. I don't want to be in there fighting the other retail traders, if that's all that's there. And then we try to look for relative strength and relative weakness. Just how is your stock performing versus the SPY or the Qs. And then when I want to enter near support or resistance, if the stock I like it looks good, but it's a long way from support or resistance, I'll just put an alert at support or resistance to indicate when it gets there, and then I will know whether I want to take that. So if these things are true, it's basically a checklist. Then when the stock pops out the bottom of the funnel, it meets all these criteria, that it becomes a prospect. Not necessarily a trade, but it's a prospect for a trade. And this is just the funnel method written out here, and I've highlighted the two important ones. The stock to be traded should have a daily and 5-minute chart aligned, and the compass indicators must align in the direction of the trade. On 5-minute charts, there's one other thing here that's interesting, and that is there's a indicator called the VWAP, the volume weighted average price. This is something that the institutions all use, and you want the price above that VWAP if you're going long, and below that VWAP if you're going short on the 5-minute chart. I only use a VWAP on the 5-minute chart, not on the daily chart or any other time frame. Well, I can use it on the 15, but not the daily, not the hourly, not the weekly. All right, so that's the key here, and the key thing of all is to have patience. One of the biggest problem with traders, retail traders, is they just do not have the patience to wait, and they get antsy and they have to have a trade on, and this is a killer, because you've got to wait for those really high probability trades. What do I determine support and resistance? Hold on a second. Gregory can't hear anything, so he's got his speakers on. All right, I can do that. So, so how I determine support and resistance, that's part of technical analysis. The things that you're going to use on your daily chart are the major SMAs that the institutions use, the 50, the 100, the 200, and then I use the 8 exponential moving average as an indicator. And then you have on your 5-minute chart, they have the VWAP and like another 15-minute EMA. I'll show you that as we get into that. Gregory, you just fixed your sound. Cool. Okay, great. All right, so the strategies, let me talk about the strategies that we use in the room and also with the alert service. Obviously, the same kind of trades are going to be created here. We do straight puts and calls, of course. That's going to be a fairly major portion of any trades that we take. Straight puts, straight calls. So long calls, long puts, long calls if we're going long puts if we're going short. We do debit spreads using weekly options expiration, if you understand debit spreads. And I have videos on all of these. If you remember the room of the alert service, I have videos on all of these strategies. But we do use debit spreads using weekly expirations. I do what's called a time spread over earnings. This is what's called a calendar spread. This is basically a non-directional trade over earnings. I only trade non-directional trades over earnings. I don't try to guess which way the stock's going to go or how far it's going to go. But this basically captures what's called a volatility crush that occurs when earnings occur. Once earnings occur, the volatility drains out of the stock option price very quickly, out of the premium, and it's called volatility crush. And that's what we try to harvest with time spreads. And then I have another one called the weekly ATM strategy, which is basically selling puts against a neutral to bullish stock every week to capture premium while maintaining a longer dated put, another put like 6 to 8 weeks out in time that's out of the money just to protect the trade. So again, you'd have to understand all these things. I have videos on all these, but I just want to cover what we do in the room. I also do credit spreads, and then we do the SPY super system, and this is only done in the room. I cannot do alerts on this. It's much too quick to do alerts, but this is what we do in the room, and I'm going to go over this in some detail because I've been doing this for a while, but the room is more focused on, longer term trades, 3, 4, 5, 6 hours, or, 2 or 3 days out to a couple of weeks. But the SPY super system trades are very quick for intraday trades. And I did this because I had a lot of interest in folks who wanted to do some trading when we didn't have any trades on. We couldn't do any trades because the market didn't allow it, but they wanted to trade and they like to trade the indexes. So this is what the SPY super system is. And it's very, very effective. All right, let's talk about the Compass Alert Service. And at the end, I'm going to I've got a really special deal on the Alert Service today. So if you stick around, you'll see what that is. It's the only time we've ever done this. It's probably the only time we ever do this, but you may find it interesting. Again, the Alert Service is designed for day trades and short-term swing trades. Day trades in the Alert Service basically going to be 3 hours or more. I can't send an alert out for a stock for a trade that's only going to last 20 minutes, but I can for a stock that's going to take 3 hours or the rest of the day or overnight up to about 2 or 3 weeks sometimes. So that's what it's designed for. So you don't have to. Again, it's designed for traders who don't want to watch or can't watch the market all day. It's also real-time alerts are on the highest probability trade setups only. So I'm only sending these out on really high probability trade setups. That's why, as you'll see, our win rate is really, really high on this. And how do I find these high probability trade setups? Well, I kind of alluded to it. We're identifying when institutions are involved in the trade. I also look at market internals, which is looking at the total number of stocks going up and up volume versus the total number of stocks going down and down volume, to see if we've actually got a bullish market or a bearish market. And then I do deeper technical analysis on each one of these particular prospects to see if it's worthwhile to take. This is a cumulative equity curve of the Alert Service. This is since like March of 23. This just kind of just shows you what the curve is. This is based on putting $2,000 into each trade. Obviously, it's going to vary, depend on that, but I have to have some sort of a baseline to identify. I mean, I don't even take the same amount each trade. It depends on what the market is that day, if it's choppy or if it's trending. But this just kind of gives you an overall view of how it's performed over the last a year and a couple of months. All right, so I want to get into options now because I know a lot of people came here for options. Gregory, you've experienced having success on 4 credit spreads and nonetheless it all back in the 5th trade, finding it difficult to manage. Well, with credit spreads, there's some keys to trading credit spreads. And again, I have a video on credit spreads. I'm not going to go into credit spreads today, but it's really important to make sure on your credit spreads, when you're selling a put, like on a put credit spread, when you're selling a put, that put has a couple of strong support areas above that strike price. And you want to make sure you're getting enough premium on your credit spread to justify taking the trade. You should never do a credit spread that doesn't give you at least a 25% ROI versus how much you're risking. All right, so let's talk about options here. All right, so this is if you haven't seen one before, this is basically a basic options chain. I know this is pretty basic, but some people may not be familiar with what an option chain looks like. This is for Bristol Myers. This is back a few months, but this is what the option chain looks like. And you've got a few keys here. This across the top, these are the expiration dates. You notice they're every week. These are expiration dates every single week on Bristol Myers. That's the key. What expiration date? When does that option going to expire for you? The next thing is the strike price. This is the strike price that you're taking your option at. Right. So these are the keys. What strike price do I want to use, and how far out in time do I want to go? So that's what these 2 elements are. Now over here we have what's a bid and an ask. And let's take a look at the 54. This is the 54 strike. See, the stock was trading at 53.79. So the closest strike to the actual price right now is $54. So this would be considered basically an at the money call or put. So this over here is what's called the bid, and this is the ask. 61 cents by 66 cents. That's what somebody is bidding for, and this is what somebody's asking. So you're typically going to get filled somewhere in between the bid and the ask price right here. But that tells you what you're going to pay for that premium. All right. And then we're going to talk about delta. And somebody wants to know, what is delta? Okay, so this is delta. Delta is, I'm going to cover this more in depth, but what delta is how fast the option price moves versus how fast the stock price is moving. If you have a delta, this has a delta, for example, of 52. See the delta is listed here, a delta of 52. So that tells you that if Bristol Myers moves $1, if the stock price goes up $1, then your option price is going to go up by 52 cents. So if delta moves from 53.79 to 54.79, your option price is going to go from about 63 or 64. It's going to go up by a half of that, by about another 50 cents. All right, so that's what delta means. Delta tells you how fast the option price moves versus how fast the stock price moves. All right, so that's the delta, and that's important. Delta is very important. When I get into the actual details of what kind of a stock you should take, you should never be taking out of the money options. You should only be taking in the money options, which means prices at the option, the delta is going to be somewhere between 65 and 75. That's what you're going to look for. You want to have some value in that. All right, so this is the put side. This is the call side. This is the put side. But if you notice, the delta here is 52 on the call, and notice that it's 48 on the put. It's always going to add up to 100, right? Because obviously this is going to move 52 cents for every dollar the stock price goes up, and this is going to move 48 cents for every dollar the stock price goes down. Okay, so that's the delta, the bid, and the ask. Now, one other thing I want to cover is it's the same option chain here, but over here I have OIVOL. This is open interest and volume. Now, the open interest and volume tells you 2 things. It tells you how many contracts were open on this option when the day started, and that's the open interest. And the volume is fairly self-explanatory. That's how many option contracts have traded today. That doesn't tell you whether they were bought or sold. It just tells you that they were traded. So if you look at the 54 call here, or the 54 call on Bristol Myers on this particular date, we had 643. That's actually the volume. 643 contracts traded today, and we had 1,004 contracts that were open at the beginning of the day. Now, the open interest does not include the 643 today. This only shows you how many open interest was available at the first part of the day. When the market opens, you're going to have volume, and that volume will then go up and go up all day long. And then at the end of the day, when everything closes, they'll have a new open interest, which will include everything that was bought and sold today, and that's going to impact what the open orders were. So this could go up or could go down. Just depends on whether these are buying or being sold. But this is not impacted by the volume during the day. All right, so that's the basic option chain. That's what you're looking at when you look at an option chain. All right, so what we're going to talk about here, as far as options are concerned, what are options? We're going to talk about that. What makes up the option premium? We're going to talk about intrinsic versus extrinsic value. This is kind of important to understand what these mean. We're going to Greeks. I'm not going to go into a lot into the Greeks. We're going to talk about some of the Greeks. Delta that we just talked about is a Greek. And then we're going to talk about the strike price and expiration dates, which we just looked at on the Bristol-Myers option chain. The volume and open interest, which we've just covered, and primary option trades that I take. And there are a lot of option trades that I don't use, option strategies I don't use, but we'll go over a lot of those. All right, so we're also going to talk about which particular option strategies you can use for bullish setups, which ones you can use for bearish setups, which ones are neutral. There are option methods you can use when you're neutral on a stock. You don't really care whether it goes up or whether it goes down. And then we're going to talk about the setups for these particular option setups, option trades. All right, so let's talk about what options are. Just to get down to the very basics of what a call and a put is. If you buy a call on a stock, that gives you the right to buy that stock at that price. If you buy let's say you've got Microsoft, if you buy a $100 call on Microsoft, and let's say you pay $4 for it, that gives you the right to buy that Microsoft stock at $100, no matter what Microsoft is trading at. All right, most people don't do that, but that's what a call is. A put is exactly the opposite. It gives you the right to sell that stock. So if you buy a put at Microsoft at 100, that gives you the right to sell the Microsoft stock at $100 anytime you want to during the before expiration date. So that's what it really is. Now, there's rights and obligations that goes with this, and the reason I talk about that is because you can buy calls, which is what we usually do, or you can buy puts, but you can also sell calls and sell puts. So this is important because when you're buying a put or a call, that gives you the right to buy the stock or sell the stock at the strike price, but you have no obligation to do that. You only do that if you want to. It's up to you. So you have the right. Now, if you're selling a put or selling a call at a particular strike price, then somebody else that bought it is going to have the ability to go ahead and buy it or sell it. And if they do that, you are then obligated to cover that position. So if you sell a put, let's say if you sell a Microsoft's trading at 100, and you sell a put at 95, and Microsoft drops down to 90, then you are obligated to buy that stock back at 95, even though the stock is trading at 90, and you lose money on it. So it's important to understand rights and obligations. So when you have any puts out there that are or calls that are short, then you have an obligation to cover it if it gets assigned to you, which is why most of the time we don't do any naked puts and calls. In other words, we don't do them unless we've got them in a spread. If they're in a spread, then we don't have to worry about the assignment because we're covered by the long call. In other words, the spread would be buying a put and selling a put. You'd have buying a put at a 90 and selling a put at 85. You're not in any trouble if the stock drops down to 70 because it's going to be assigned to you at 85, but you can buy it back at 80 because you've got a spread on it. I'm not going to want to get into a lot of detail on this, but that's the way that works. So knowing your rights and obligations is important. So when you buy, you either long call or long a put. So you buy a call or you buy a put. That means you're long. If you sell a put or sell a call, that means you're short. Right? And you got to be very careful here. If you sell a put or sell a call without without owning the stock, without having it in a spread. That's called a naked put or a naked call, and your liability is much, much higher in these. When you buy a call or buy a put and you pay a specific amount of money for it, that's your total risk. You don't have any additional risk. And all the trades I take in the room are what's called defined risk. You can't lose any more money than you put into the trade. So when you buy a call, you're bullish, expecting the stock to go up. When you sell a call, it's bearish. You're expecting the stock to go down. We don't ever do this. When you're buying a put, it's bearish. You're expecting the stock to drop. And when you sell a put, that's bullish. In other words, you're selling a put at a lower price. You don't expect the stock to drop. You're trying to keep the premium. And again, this is something I don't do unless I want to own the stock at a lower price. Right? So these are what options are, but it's important to understand that. Just you need to understand your rights and obligations to this. Okay, so we're going to talk about what makes up an option premium. Let me just take a sip of water here. All right, so a lot of people think options and trading options, trading stocks is the same thing. It's not. You've got options, and options can be at the money. So if the stock's trading at 100 and you buy a $100 call or a $100 put, that's an at the money option. They can be in the money. So if the stock's trading at 100 and you buy a $95 call, then that $95 call is in the money because the stock is trading higher than that. If the stock's trading at 100 and you buy a $105 put, that's also in the money because the stock is trading lower than what the stock price is. So then what the option price is. And then you can out of the money puts and calls. And that would be if, for example, Microsoft's trading at 100 and you buy a $105 call, the stock's still got to go up $5 to get in the money. Those are considered out of the money calls. These are bad trades. I always recommend against doing out of the money calls, except in very specific circumstances, because of what I'm going to show you right now. So what makes up a stock price? All right, stock price is made up, or what makes up an option price? It's made up of the stock price. So if Microsoft's trading at 100 and you want to buy a $100 call, and let's say you pay $4 for the call. Well, if the stock's trading at 100 and you're paying $4 for it, that means that stock's got to go up to 104 before you can even get even. So that would be an at the money, right? If Microsoft's trading it at 100 and you buy a $95 call, then the stock's already $5 above what the stock strike price is. So you've got at least $5 worth of value in that option when you trade in the money. That's anything below on a long call, anything below the current price of the stock is considered in the money, and then out of the money would be if you, as I said, if you did a $105 call when the stock's trading at 100, you still get $5 to get there, right? So that makes up part of the option premium price. And then you have what's called intrinsic value. Intrinsic value is what we just covered, what I just said, which was if Microsoft's trading at 100 and you buy a $95 call, you've got $5 worth of intrinsic value. That's the option is going to be worth at least $5 because the stock is trading $5 higher than the option price. So you've got a $5 worth of intrinsic value in that. So if you buy a $95 call, it's going to cost at least $5 if the stock's trading at 100. Plus, they're going to add in what's called implied volatility, which is going to increase the price of the option. That's how volatile the stock is. The market makers add that in there. And then there's the last item is time decay. And the time decay is how close am I to the expiration date? The closer you are to the expiration date, the faster the time decay is going to come out of the stock. So if you take a $95 call at Microsoft that's trading at 100, you're going to pay $5 plus the implied volatility plus the time decay. So let's say you pay $7 for a Microsoft $95 call that expires next week. You pay $7 for it. If you go out 2 weeks further out, it's going to cost maybe $8.50 because you've got a lot more time before that option expires. So they're going to increase the time decay portion of your option price. So the further out in time you go, the more you're going to pay for the option because you've got more time for the stock to get to your level. All right, so that's what really makes it up. You get the stock price, the intrinsic value, how much of their value is actually intrinsic, and what the implied volatility is. And this is going to be different on different stocks. Some stocks are extremely volatile, like SMCI or Tesla, or depending on the time, you know, some of the high tech stocks that really move can be really volatile. So they're going to add a lot more volatility if the stock can move around a lot. And then time decay is directly related to how much time there is before the option expires. And time decay, by the way, accelerates the closer you get to the expiration date. So if you buy an option that doesn't expire in 3 weeks, and then you buy one that expires this week, the one for this week is going to time decay much faster than the one that's out in the future. And most of the time decay occurs in the last few days of the time. All right, so I got to just go over this one more time, what intrinsic and extrinsic value is. And I'm using a $50 stock here, but a $50 option on a stock trading at 55 has an intrinsic value of $5. So because you're buying an option for 50, which means you can buy that stock at $50 and it's trading at 55. So if you turn around and exercise your option right then, you can sell it for $5 more. So it has an intrinsic value of $5 in it, okay? The extrinsic value is the option value minus the intrinsic value. So if this was $5 of intrinsic value, but when you buy the option that they're charging you, that it's costing you $6.50, you've got $1.50 of extrinsic value. In other words, that's how much value of that premium is in time decay and volatility, and that's what is going to be subject to decay as time goes by, the extrinsic value. So the more intrinsic value you have in a stock, the less time decay you have on that particular option price. That's why we like in the money options. It's also important is the volume of options traded at a strike price and expiration date. This just says how many other folks have traded that option at the same strike price and expiration date if you have. If I need to get out quickly, is there enough open interest there for me to sell it without too much trouble? All right. The Greeks we'll just cover fairly quickly. Delta we talked about already. How much the option price moves in relation to the stock price, right? The stock moves $1, delta will move. If a delta of 50 means the option will go up 50 cents. It's not that really that complicated. It just lets you know that the higher delta you get, the faster your option is going to move up when the stock price moves up. Theta is the time decay. We just talked about this. That's the decrease in the value of the option price as expiration date approaches. And again, it accelerates the closer you get it. There's less and less time for that stock to get to the price you want it to. The time decay is going to drain more premium out of there pretty quickly. And this is why we do credit spreads, because we're actually selling premium when we do this. So we're actually taking advantage of time decay. We actually want the time decay to benefit us because we've sold the premium, and we can buy it back cheaper as time goes by. And gamma is the third one I'm going to cover here, and that's the rate of change in delta. So if you buy an at the money call, for example, a $50 call, and you've got a $50 call on a $50 stock, and you've got a 50 delta. As the stock moves up, let's say it goes from 50 to 52, the delta is going to move up. It's not going to be 50 anymore. It's going to get higher because the stock price has gone up. So now maybe you go from a delta of 50 to a delta of 60. The rate of change in that delta as the stock price moves up is called the gamma. So that's the option price can change dramatically with only a small price change in the stock, because the gamma is tied to volatility, and it can move really, really quickly. You'll see this if a stock goes from like $9 to $12 in a half an hour in the morning, and it's really shooting up really fast. The stock price will have gone up $3. You may actually see that the option price has gone up by $3.50. It's actually outpacing the stock price. That's because the gamma has moved the delta up so fast that it's moving up really, really quickly. But this is a double-edged sword, because if the gamma is high and the option price is moving up fast because of that, once the stock price stabilizes, it starts to move sideways, the gamma comes down, and the option price can drop, even though the stock has not changed price at all. So that's something to be aware of. It really typically is more important if the stock is just really ripping up, like a momentum stock, ripping up or ripping down. it can have a fairly significant effect on it. Just be aware of that. It's something I would not recommend new traders try to trade, which would be momentum stocks. Okay, so the primary option strategies, these are some here I don't use, but long calls of put obviously is the most common one. Put credit spreads or call credit spreads. We talked about that briefly. Put debit spreads and call debit spreads. This is you create a credit for this. When you do this, you actually collect money into your account, and then a debit spread, which you're paying money for. And then calendar spreads, which I call time spreads when we trade over earnings. Again, this is a non-directional trade. A time spread's a non-directional trade. You don't care which way the stock moves. We're basically trying to harvest some volatility out of that. And then there's this thing called condors. Some people call them iron condors. And the condors are basically put credit spreads and call credit spreads. The call spread is spread above the price, the put credit spread below the price. You're trying to collect premium as long as the stock stays within a range. There's other strategies called butterflies, and I don't use these condors in the room. I don't use butterflies in the room. I use them occasionally, but that's another strategy. And then there's strangles and straddles, which I do use. And both straddles and strangles are non-directional trades. Basically, condors, time spreads, and straddles and strangles are non-directional trades. Vega, Martine, I'm not gonna get into Vega today. For most people trading options, I don't even look beyond. Typically, I really look beyond the delta on something because time decay I can figure in my head, so I don't look beyond that. But as long as if you're buying an option, just be aware that you want to buy an in the money option with a delta of around 65 to 75. All right, so this is a bullish, bearish, and neutral option strategies. So if you like a stock and you want to go long, you've got a lot of things. You can buy the stock, obviously, but as a bullish option, you can do a long call. You can buy a call, or you can sell a put. Don't recommend it, but you can sell a put. You can do a put credit spread on it or a call debit spread on it. All of these are bullish option strategies. And anytime I put out a trade, I try to analyze which is the one that's going to give us the best ROI, best return on investment for the particular trade that we take. How much does it cost, etc. The bearish is going to be we're going to have we can short the calls, sell the calls. We would be long puts. This is generally what you're going to use. Long puts for short, long calls for long, for bullish, and call credit spreads and put debit spreads. So these are the bearish strategies. And then on the neutral side, we've got condors, which, as I said, I don't use, straddles, strangles, and time spreads. Straddles and strangles are basically just if you're doing a straddle on a stock, let's say Microsoft's trading at 100, you buy a $100 put, a $100 call. So you're long a put and long a call. You don't care which way the stock goes. We just want it to go far enough into the money, in the call side, or out of the money. So if it goes at 100, if you buy a $100 put and a $100 call, and it costs, let's say it costs you $4, you need that stock to move either up past 104 or down past 96. You don't really care which way it goes. You just want it to move fairly fast and in that direction. You're looking for a big move, but you don't care which way it goes. All right. The setups. I'm just going to go over these pretty quickly. And again, I have videos on all of these things. But if you're going to do a put credit spread, you're selling a put and buying a put at a lower strike price, and you receive a credit. Call credit spread, you're selling a call and buying a call at a higher strike price to receive a credit. Again, this is a bearish strategy. This is a bullish strategy. The put debit spread, you're buying a put and selling a put at a lower strike price. This is just like if you like the stock short, you could always just buy a straight put on it. But if you do a put debit spread, you're buying a put and then you're selling a put at a lower strike price. What's going to happen is going to reduce the cost of that trade for you. You're not going to pay as much as you would for a long put. And the same thing on the call side. If I buy a call and sell a call at a higher strike price, it's not going to cost me as much as if I buy a straight call, because when I sell a call, I'm getting a credit on it. It's going to reduce my cost. All right. Calendar spread we talked about. You're going to sell a put or a call at a near expiration date, like this Friday, and then buy a call or a put with a later expiration date. So you're buying or selling a put or a call for the current week, and then buying a put or you're selling a put or a call for this week, and then buying a put or a call for next week at the same strike price. And time spread is what we also use in the room. We do this over earnings. It's a specific calendar spread. We use the current week's expiration, next week's expiration. All right, so we're selling the current week's expiration call or put. I generally use calls, and then buying the next week's call, same strike price, to capture the implied volatility crush as the premium option, as the earnings come out. When the earnings comes out, we can capture the volatility drop, because we sold it for this week and bought it for next week. The volatility drop for this week is going to be higher than the volatility drop for next week, so we capture the difference. All right, and then the strangle, we buy a call and buy a put, one strike away from the money. We talked about this. If you did a strangle on Microsoft and it was trading at 100, you'd buy a $101 call and a $99 put, and that gives you a strangle. Straddle, you'd be using a $100 put and a $100 call. All right, and if you don't understand these, it takes a little bit of time to do this. You can look at the video again, but again, I have videos on all of these in the room. All right, so choosing the best option. Now, this is if you're trading options, you kind of want to know what strike price, what expiration date, and what delta to use. And these are related. So typically, if the stock is trading, we'll just say 100, I'm going to be buying a call. If I'm long, I'm going to buying a call that the strike price is lower than the option price, than the stock price. So if I get a $100 stock trading at 100, I'm going to buy a strike price below that, 98, 97, 96, 95, something like that. And then I'm going to look at the delta. So if I can get a delta of around 65 to 75, let's say the 96 call is a delta of 70, that's what I'm going to take. And the expiration date, even if I'm only trying to trade this for the day, I'm going to go out 2 to 3 weeks at least in time. If it's going to be a longer term trade, if I'm looking to swing this for a couple of weeks, I might go out a month. I want to give myself plenty of time on the tail end, so I don't suffer any additional time decay. So those are what I look for. So I'm looking for a delta of about 65 to 75. I want to be 2 to 4 weeks out, or sometimes more, as far as expiration date is concerned. And again, the strike price is going to be in the money. The strike price is going to be less for calls. It's going to be less than the current price of the stock, and for puts, it's going to be more than the current price of the stock. All right, so that's going to give me intrinsic value. All right, so that's options, and I know it's fairly quick and it may be a little confusing, but there's a lot of stuff that goes into options. But I try to cover the key things that you need to know as far as options are concerned. Now what I want to do is do a quick review of the results we've had in the trading room and in the alert service, just starting from January. I mean, I go back almost 2.5 years, but this is to show you a couple things. It's to show you typically what our win rate is and how much money you would make if you were investing $2,000 in each trade that we took. And then it's also meant to show what our percentage gains are. Our percentage gains are going to be very, very consistent. You're not getting 5, 6, 7, 800% gains on these stocks, on these options. That's just not practical. And you can read about it all the time. It's not true. You can't make consistent profits trying to make 500 to 600% on a trade. It's just not going to happen. You get people to tell you that you can do that. You'll get a winner here and there, but you're going to have tons and tons of losers. But typically, you can see we have in Zim, we had 43%, 37, down to 10% in JPM. But it's going to run, 10 to 30, 40, 50%. We had Boeing, we had a 96% gain here, and we had a Gilead loser. Again, we have losers most every single month. I've had, I think, 1 month with no losers, but typically you're going to have some losers. But our win rate, again, usually is between 85 and 90%. In January, we had 20 wins and 2 losses. 2,000 invested in each trade, netted $7,505. Pretty good, 90% win rate. This is February, and I'm not going to go through every month, but February trades, we had 24 wins and 2 losses, 92% win rate. This is our best month of the year so far. February, we had 2,000 invested in each trade, netted 11,700. And I broke the alerted trades out for February as well. 20 wins, 2 losses. Again, we don't have as many alerted trades as we do in the room because some of the trades in the room are too quick or too late. I can't put an alert out on a trade I take at 10 minutes of 4. So there's going to be a little bit of a difference here. What's my ideal percentage gain to exit out? You know, that's a good question, and it's a very difficult question to answer, because when I'm looking at exits, it depends on what kind of day the market's having. If the market is trending, I can stay in a trade longer, so I can get a higher gain. If the market is choppy, then I got to take profits more quickly, because there's much more of a likelihood of a stock turning against me. So typically what you see here is anywhere from, I usually, if I'm in a trade and let's say I get in at 11 o'clock in the morning and it's 1 o'clock in the afternoon and I'm up 30%, I'm going to make sure that I take profits on that day. I'm not going to give up the 30% gain, so I'll stop watching it. And if it starts to drop down, I'll take it off. If it continues to run, I'll just look, for 35 or 40%. But typically, you can see what we get here. They're all 20, 30, 40, 50% range. And again, losers, we do have some losers. It's important to understand that. But we did 1175 on 2,000 in each trade in February, and in the alerted trades, 20 wins, 2 losses for 6,930 on the alert service. Just kind of recap here. This is 2023, investing 2,000 in each trade, taken in the room, produced a profit of 60,000, a little over 60,000. This I just said, if you had a $50,000 account balance, you'd be using 4% of your account balance on each trade at the beginning of the year. It would be down to 2% of your account at the end of the year, since the account grew from 50,000 to 110,000 for that. So that was, and listen, this year is going about almost exactly the same. First quarter of 2024, in the trading room, 65 wins, 11 losses, 86% win rate, 18,000 profit. Alert service in the first quarter, 41 wins, 6 losses, 87% win rate, pretty similar. 12 to 24 in here, a little less because we didn't have as many trades, so we didn't have as much risk. Second quarter, trading room, 65 and 14, 83% win rate, a little lower than what I'm used to. About 14.8 profits, and over here, 35 wins, 6 losses, 85%, 11.7, 84. So that's the first and second quarters, pretty good quarters. And again, if you look at what the total is here, you've got 18,000 and 14,000, so you got about 33,000 in the first half. That extrapolates to a little over 60,000 at the end of the year. All right, this was the May trades that we had. I did pop in here for some May trades. I've identified the time spreads. These are the earnings trades that we took. Alerted trades, 15 wins, 2 losses, 88% win rate. 2,000 invested in each trade, had 49.79 profit. Oh, just hold on one second. My doggy wants me. Sorry about that. My dog nature called. All right, and so this was May trades here, 15 and 2, 88% win rate, 49.79. Options trading room, the options room, this was the alerts, 49.79, and 29 and 7, 81% win rate, pretty low, but still $5,700 profit. This is really what matters, but I like to keep my win rate between 85 and 90. Again, you can see the percentages. We did this time spread, 71% of this, had a loss here, 50% on this time spread, 60%. Time spreads usually produce a little bit higher profit than straight calls and puts do, but they're very more specific, and we can only do them during earnings season. June trades, you can see we got the room, 25 and 4, 86%, 75.90, and the alert trades, 14 and 1. The alert trades were really good, $8,300 in the room in June. And again, you can see the percentages. And again, you can see we had some losses. And I try to identify some of the strategies that we used here. Weekly ATM, put credit spread. July trades, we're getting close to, in the summertime. Summertime, it gets pretty slow, but the July room, we had 85% win rate, 6,000 in profits. July, 3,300 in profits. And, a lot of the profits are dependent on what the market's doing. Choppy markets make it more difficult. Can't stay in them as long. You have to take shorter term exits on the things, so it cuts down a lot of times on the profitability, but I mean, it's still pretty, obviously it's pretty profitable here. Alerted trades, this is our worst month in alerts this year. 12 wins, 4 losses, 75% win rate, still $3,300 profit, which is, considering the alert service, what the cost is, it's really pretty good. But again, you can see we 12%, 43%, 28%, 29%, 50%. This is what you're going to expect in the trades that we take. And this is our August trade so far. I haven't put the last week in here, but again, 17-2. August, very slow month. August is a slow month. A lot of hedge funds are not even trading. There's just not an awful lot going on. 89% win rate though in the room, 45-35, and on the alert service, 8 wins and 1 loss. Not very many trades. 89% win rate, still netted 2,462. A lot of lower wins because the market was so choppy. But again, you can see the percentages kind of hanging in there: 14, 24, 42, 35. Not much variation in that. All right, so that's just to kind of go over the results of what we get in the room and the alert service and how well this thing is produced. And it's been doing this now since 2.5 years that I've been doing this. On the alert service, this is basically what you get. Every alerted trade is going to include the stock symbol, obviously, the option strike price, the option's expiration date, and how much to pay for the option. You know, I mean, I might say $1 to $1.05 or something. It may be a little bit of a range, but that's what you're going to get. And these come out really quickly. I mean, I have the alert service on my phone, so I know when I put the alert in, I can tell how long it takes, and it takes about 10 to 20 seconds to get to my phone by the time I put the alert service in there. Are some of the alert trades the same as the room trades? Gregory, all of the alerted trades are trades we take in the room. Alert doesn't have as many trades as the room does because there's room trades I can take in the room that I can't put alerts out on because of the time frame, et cetera, on them. You know, I can't do the SPY super systems, and typically I can't do anything that is moving too fast. In other words, if I put out an alert to buy something at $1.10 and it's likely to be $1.50 by the time you get the alert, I don't do that. So that's why the number are lower. But everything you get in the alerts is in the room. In other words, all the trades in the alerts have been called out in the room. All right, so that's what we get here on the alert service. Now, I usually will send out an alert when I get into the trade, and then I'll send another alert out to give you an exit, when to exit, not when to exit, but what price to exit at, so that you can then set up the sell price, put it into your software, into your trading platform, as good till canceled, and if you're there or you're not there, if it hits that price, it's going to execute and you get out. And that's really important on things like time spreads, because a time spread that we take overnight for earnings, a lot of times those things will fill right at the market open. So I always put out the sell price on a time spread the day that we put it on, so that it's working in the morning when the market opens. I'm assuming I'm managing each trade from one day to the next. Yeah, you know, typically, Gregory, if I'm in a trade, first of all, remember, I'm getting into these trades, not the SPY super system trades, but everything else. I'm getting into them based on the daily chart. So if my daily chart is bullish, and let's say I've got 3 or 4 weeks to expiration, as long as the daily chart stays bullish, I'm going to stay in the trade. You know, it would have to break down below my support levels and close below my support levels for me to take the trade off. So I give them a lot of time. And a lot of times you're underwater on it for a while, and then they bounce around and come back up again. So, you know, but that's how I trade. I'm always using technicals, and I'm staying in a trade as long as it's telling me that the trade is still bullish. Once it breaks down, then I get out. Then I'm going to give you an exit price and take a loss. But I manage them, you know, typically. And if I'm in a lot of trades, we get in the morning, like 11 o'clock, 12 o'clock, and I'm out of it by 3 o'clock. I'm obviously watching it to make a determination of if I see a resistance level above, I'll go ahead and set a sell order based on what I think the option premium will be when it gets close to that resistance level. You know, within a bit of it, and that way we close the trades out. And that happens a lot. It'll get to my level of sell price. The stock will sell. We take the profits, and it hits the resistance and turns around and heads back down again. All right, so there's what you get on your alert service. All right. Now we're going to talk a little bit about how I just kind of want to show you how I'm finding these results. we're able to identify when institutions are driving a trade. Well, we do that by using the compass system. And when the market internals are heavily bullish or bearish, I look at the market internals for volumes of stock moving up, volumes of stocks moving down to see if they're bullish or bearish. I say here that we only take trades when both of these are in our favor, but that's really not true. If the market internals are neutral, but the institutions are in buying the trade, then I'll trade the stock. I'll trade the option. I don't have to have internals bullish or bearish as long as they're neutral. If I'm going long and the internals are bearish, then I wouldn't take it. But as long as they're neutral or bullish, I take it. Right. So we only take the trades when we have the very highest probability trade set up. And so we're trading with the institutions. This is important. We're trading with the institutions. And how does the compass system? Just briefly, I'm going to show you how we identify these things. It does what's called a triple screen assessment. We look at three different things. We look at momentum, we look at trend, and we look at money flow. We look at the momentum over multiple current time frame and multiple time frames, trend over current time frame, multiple time frames, and then money flow the same way. And when all three of these are lined up, we get momentum in all three of these, trend in all three of these, money flow in all three of these, then the likelihood that that stock is being pushed by institutions is extremely high. You know, somewhere in the 97% likelihood that's happening. And then if you add relative strength and relative weakness into the equation, it even gives you a higher probability that the institutions are in that trade. All right, so I'm going to show you a couple things here. Now this is the compass system on Thinkorswim. I have it on my Thinkorswim platform. I don't trade off of Thinkorswim. Again, you don't need, if you have the compass system and you have Thinkorswim, you don't have to trade on Thinkorswim. You can trade with any platform that you want. But this is just kind of an example of the indicators. This is Tesla. This is one we took here. This is a 5-minute chart. We use this on what's called a Fibonacci candle. But the key thing here is these are the indicators that are the main ones. This indicator right here is multiple time frame momentum, and this is current time frame momentum. This is long-term trend, and this is money flow. You're going to see that as we go through this, green and blue is bullish, red and yellow is bearish. And that's all. This is what you need to know if the institutions are in. This tells us when the institutions are in and when they're not. All right, but when we're looking at these things, and you can see that in this particular case, Tesla was pretty bullish, but institutions were buying the heck out of this thing. All we had to do was try to pick a good spot to get in. And this little thin green line here is called the 15 EMA. It's one of the support and resistance levels I use on a 5-minute chart. But what we get in, I get in right here. This compass system produces what's called a pop symbol, pop out of the box symbol, this pink arrow. This tells you to stop breaking out of momentum, which is what I'm looking for, to break out of momentum. We bought it right here, and we sold it right here as it moved up. You can see it just kept moving up here. Right, so that's kind of what the compass system looks like, but I'll get into much more detail here in a second. But I do want to cover the SPY Super System first. Now, this is important because we don't alert on SPY Super System trades, but if you're in the room, or you want to be in the room for a while, or you have the compass system, you can do these SPY Super System trades. And these are intraday trades on the SPY, SPY, the Qs are IWM. Those are the three indexes I use, S&P 500, NASDAQ, and Russell 2000. All right, so now a lot of people like to trade these things. And I'm trading these off of 5-minute charts, and I'm using the compass system to identify these. So I only started quantifying these in July, for the last part of July, because I was using them, but I wasn't really calling them out in the room because I didn't think anybody in there really wanted to trade that quickly. Most people wanted to take shorter term trades. And I like taking longer term trades, but a lot of people were just looking for swing type trades or longer term trades. But then I found there was a lot of folks come in who wanted to trade indexes. They asked me about trading, quickly on indexes during the day, because a lot of times we don't have any trades on. I mean, we're watching. So this gives you the opportunity. So in July, it was 16-0, 2,000 invested in each trade, produced 25.96. Now a lot of these trades are not only make $10, $20, $30 a contract on these trades, because they don't last a long time, as I'll show you here in a minute. And in August, I've been doing this a lot. This is not 2 trading days now. This is for the whole month of August now. I'm done with August. 56 wins, 6 losses, 2 scratches. So 2,000 invested in each trade produced 82.01. Now, this is a lot of money compared to the regular room, but that's because we're taking so many trades, and you have to be fairly nimble to take these kind of trades. It's not for everybody, but I have so many people asking me about this. I want to point this out. So this is the trades I took And I've got a lot of people in the room that are taking more than that, less than that. They're not, I call them out, but they find their own and they're doing very well with that. But again, you have to have the right mindset for this. Let's see, why not trade on, oh, you can trade on TOS. I trade on Tradier using TradeHawk because the commissions are low. I pay $10 a month to Tradier to trade using TradeHawk, and I pay $10 flat fee. I don't pay any commissions on stocks or options. I just pay the ECN fee, which is just a few pennies. And I trade thousands of options contracts a month, so it's a big deal to me. And I can't get Thinkorswim down that low. So I like Thinkorswim. I used to trade on it all the time. I love the platform. I love the trading on it. It's owned by Schwab now, but it's still a really nice platform. But I trade on Tradier. It doesn't really matter which one you do. As long as you get the Compass system on, for example, on TOS or on Ninja, you can trade in any platform you want. So this was the results of the SPY Super System in August, and I got to change that to the whole month. 56.60. That's a lot of trades. It's a lot of trades. A lot of times I'll take 4 or 5 days. Some days only 2, but it depends on when the settings come. But this is a pretty nice profit. But again, these are a lot more trades, and you've got to be very nimble on these things. You got to understand. I have a video on exactly what to look for. Now with the SPY Super System, and this is what that we've kind of focused on because so many people couldn't stay in the room all the time. They wanted to come in for a couple hours in the morning, an hour in the afternoon, and we didn't have any trades to take at those times, and they wanted to trade. So the SPY Super System, you're only going to have 1 trade on at a time, and it's going to be very quick. A lot of times it only lasts 2, 3 candles, maybe 5 or 6 candles, but that's it. So they're very quick tradings, right? And I did want to kind of show you some. So this kind of shows you a SPY Super System setup here, and there's the Compass system. And I told you, red and yellow is bearish, green and blue is bullish. And here's all the indicators. But for the SPY Super System, the only indicator down here that we're using is this one right here. That's the current time frame momentum. We're looking for the current time frame momentum to switch from red or yellow, which is bearish for a long, to blue or green, which is bullish. So see this switch change right here from red to blue. This says the institutions were selling on the current time frame, and this says this buying on the current time frame. This captures the switch when the institutions go from buying to selling on the current time frame, only on the current time frame. Notice not on the multi time frame. So that's why this is going to be quick trades. So here's what we have here: the current time frame momentum. That's one of our criteria. This is a VWAP right here, and this little thin green line is a 15 EMA. Those are the 2 support resistance levels that we focus on. All right, there's a VWAP to 15 EMA. That's all I need. That's all I need to trade this. Here I get a pop out of the box symbol on the Compass system, right there, the pink arrow, telling me that there's a compression break. The Compass system puts that out. I see it goes from red to blue. It pops here, and it goes above the VWAP. Notice it's broken through the VWAP. This is where I get long. It's above the VWAP. It's bullish. The institutions are buying it. It's bullish, and I get it's coming off of the this pop out of the box. It's coming out of compression. As long as it stays above the 15 here, I stay in the trade. And this is what I wrote this one right up here. This is where I took profits. You see how we're getting wicks and tails here, and we're starting to get a little bit of momentum loss. And it's getting kind of extended from the 15 EMA. Took profits here. So this one trade, again, this is a 5-minute chart. That was good for $220 contract. And those are the only things in the Compass system I use for the SPY Super System. For my other trades that are going to be longer term trades, all day or 2 weeks, I got to use all of the indicators. But mostly the multiple time frame and current time frame are the 2 that I key on. And for the SPY Super System, this is what I'm keying on right here. Will the trade bot work on Ninja to send your trades to Tradier? Well, I don't know if Ninja will let you send them to Tradier or not. I mean, all I do if you get it on Ninja, all you would do is the same thing I do on the Compass system on Thinkorswim. When I get a setup, I just put my trade in on whatever platform I'm using. I don't expect them to send it to it. I do it myself. I just enter the trade. I just use it. I don't use Thinkorswim to do it. What are the VWAP parameters? VWAP parameters are always standard. If you go to any platform, VWAP is volume weighted average price. It's calculated the same way. This is what the institutions use. You just select VWAP as one of your indicators, and it'll put it right on there. Can I trade this by daily options? Yeah, Gregory, I mostly I do trade I do trade 0 DTE on the SPY Qs at IWM when I'm doing day trades, except if it's late in the day. If I do these things after 1:30, 2 o'clock, then I'll take the next days, not intending to keep them overnight, but just to reduce the amount of time decay that I take on them. So the mostly of these are 0 DTE, 0 days to expiration, that means, which means I'm taking the options that are expiring today. All right, so this is all I need. I just need the break right here. Institutions selling, institutions buying. Okay, is it breaking above the VWAP or is it above the VWAP? It is above the VWAP. I get a break out of compression, then it's fine. Is it likely long green for the day right now, the SPY? Yes, it was. So I take the trade and I write it up, but I have to monitor these things quickly. You can't just get into these and get out of these and let them go. You've got to monitor these. But that's the setup on there. So that again, VWAP, 15 EMA, current time frame momentum. That's it. That's all I use for this trade. This was one here. This was a SPY super system. This is 823. Again, this was a short. If you look here, you notice that you get a break out of the box here. I'll pop out of the box below VWAP. See this candle right there? This, by the way, is the 50 EMA. I don't use this. Actually, it's 50 SMA. I don't use it on the daily. But it breaks down here, and if we look down here, you see what the current time frame momentum is showing us. It's yellow. It's already bearish. Those institutions were already selling. I get a breakdown here, so I enter right here, and then you notice it just kind of moves sideways. Now I'm using the 15 EMA as a stop on this thing, the little red line. So I just watch it. As long as it closes above the 15 EMA, which it did, I stay in it, and then it breaks down here and flushes right down here, and then I get out right here as it turns around, which is I'm getting green here. Notice it stayed red the whole time. The institutions were selling through this whole time, so I had fairly good confidence that the stock was going to continue down. $280 a contract on that trade on SPY Super System. And I'm cherry picking these obviously because there's most of them are winners, but I try to find ones that are obvious to see. Okay, so here's this was another SPY Super System, $220 profit. Again, selling red, buying blue. Institutions just came in and started buying, breaking above the VWAP. Perfect entry because the VWAP at this point becomes your stop. See how close your stop is? If this gets a candle and it heads back down and puts a red candle in and closes below the VWAP, you're out. You haven't taken an awful lot of losses on that. All right, so now it just moves up here along the 15. So I just stay in it, I stay in it, I stay in it. It's getting pretty extended, and then pop out right here. As I start to get this wicks and tails, I get out. Again, I'm watching it closely. Now, it did stay bullish the whole way here. You notice it's blue and green the whole way out through here. But turned to yellow right here, so I would have been getting out anyway. But I timed this to get out there, 220. And here's one more. This was a smaller profit, $150 profit. This was on the IWM, the Russell 2000. Again, here's my entry here. See how it went from red to blue? So I know we're going to, the institutions are buying, but I'm right on the VWAP, but I'm waiting for a break. You see this? I'm waiting for a compression break, which I get right here. I get the, and I might have only just seen it when it occurred here. So breaks here above the VWAP. I get in here and I ride this thing up. Now I get the 15 offering me support all the way up, and I get out right here as it turns red right here. But it didn't move an awful lot. That was only $150 profit per contract, but that's still pretty good. And I get a lot of trades that I only make $30, $40, $50 a contract on that are much quicker. You know, they go up for 3 candles and then they'll reverse back down again. All right, let's see. You share the indicators with as a member. If you get the indicators, you have to have the compass system loaded on the Thinkorswim on Ninja to get the indicators. You have to buy the compass system, and they'll put it on your software for you on Thinkorswim or Ninja, and then all the indicators will be there. But if you're in the room and you don't have it, you're going to see it because if you're in the room, I'm showing it all the time. That's what I have up all the day. I'm talking about the SPY Super Systems and regular trades all day long, so you can see it right there. Sarah, when you're referring to institutional selling and buying equals dark pool action, no, not really. I mean, dark pool action is dark pool is different. Dark pool is different. What we're looking for is we're looking at indicators to tell us what the institution's doing. It's important to understand what momentum is, all right? Momentum just doesn't mean the stock's moving up fast. It just means that the close of every candle, of every bullish candle, the close is getting closer and closer to the high, which tells you that the institutions are pushing that thing up. That's what tells us if institutions are in the trade. That's what momentum is. Momentum is such a critical element of that. How much longer will be in your presentation? Not much long. We're just about done here. I'm going to cover a couple of stocks and then the offer, and that's it. All right. Sorry, it's taking a little bit longer than I thought. All right. So, and again, I'm going to skip by. This is some more SPY super system trades here, as you can see, but I just wanted to show you this one here. So you can see it is the SPY. It went from red to blue up to the VWAP. As soon as it breaks above the VWAP, you get in, you ride it up here, and you get out. All right. So I won't go over a bunch more. I got a bunch more of these, but I think it's pretty obvious what I'm seeing here. All right. There's a SPY here, and another one there on the SPY. So anyway, these SPY super system trades are what we call out in the room. I do want to show you some regular trades, just a few regular trades that we take in the room and on the alert service for regular stocks, and how we use the compass system. Here's Lulu. We did a put debit spread overnight on this. You notice that we've got red and yellow across the board here. Lulu is bearish. The institutions are selling. This is where we buy it right here. We took it overnight and wrote it down here. I think we took it right here actually and took it overnight here, and I got $3 a contract on this thing. So that was pretty good. Workday, another one. So this shows you what the indicators look like on Compass. All right. All right. So this is Workday. Notice here that we had blue here on the current time frame. We had blue here. Then went to yellow. So I had to be really careful on this. This was a daily chart, but I like this breakout. So I had current time frame blue, and then I got into this thing, and it worked fine. I mean, this switched back and forth, but the current time frame was doing very well, and that's on a daily chart. So there's a lot of indicators here that I use, but not a lot. But this is a dynamic compression zone, this shaded area. All right, this was a GCT, same thing, 2-day trade for 26%. Notice all green. Institutions buying, just trying to find my entry right here on the compression break. MDT, same thing, bought here, went from yellow to blue. Selling, buying. The long term was already green, so institutions turned to buying here, bought it right here and get out right here, 25%. DKTX, same kind of thing. So again, you can see the indicators. I'm not going to go over all these indicators because I've got a lot of trades that this is what we use, but I want you to see what the compass system does for you. And you can see this, anybody can see that the institutions are buying McDonald's here on the daily chart. I mean, they're buying it. Where do I get in? I just wait. I wait for an entry of a compression break like that. Amazon, same thing. This is a 5-minute chart, 32% profit in 45 minutes. See the green? Institutions buying, multi-time frame, current time frame, critical here, 15, right off the 15 with a pop out of the box. I buy it there and I get out in 45 minutes for 32%. Okay, so that's what they look like. I'm not going to kill you with more charts. I've got a lot of them here. And this was Verizon, 50% profit in an hour. But you know, are they selling? Yeah, you can see that they're selling. So this is and this was a SPY super system. We've seen enough of those, I think, but this was where he took it right here and it moved right down. That's the setup right there. See, VWAP, 15 EMA down there, all red. All right. So that's again, that covers the services and it covers the charts. I don't want to spend too much time on these things. What I want to tell you about here, and let me just check a couple of questions here. How do I get the compass system on a new Thinkorswim version? If you buy the compass system, they'll load it right onto your Thinkorswim platform on your computer. You don't have to do the text at Rightline will put it on there for you. They'll set it up. It'll look exactly the same as mine. I've got a bunch of scanners that goes with it. You know, there's a bunch of scanners that you get. You get all of my indicators exactly as they are. It looks exactly like my chart does. Do you get a recording? You will get a recording of this, yes. Are you using a scanner to find the trade ideas of the same companies? You know, I use scanners on Thinkorswim. I have a bunch of them out there. I also use TC2000 and I do scans on looking for trades. So I have about 1,000 different symbols that I scan, and you know, most of the major ones, of course. All right, so what I'm talking about here, and I said this was really a good deal. This is the first and probably the only time they do this. For the alert service here, you get first of all, you get a month in the trading room for free. You also get on the Discord chat, which we have two other professional traders in Discord that also post high probability trades all day long, answer questions. They give you lots of information on what the sectors are doing, etc. And there's also a video library. I've got about 28 videos out there of everything about compass indicators, how to trade high probability trade setups, every single one of the type of strategies that we use. But for the Labor Day sale on this options alert service, quarterly is $396, which is really cheap. Annual for $992, and you get lifetime here. If you want a lifetime, that's 50% off. Is $24.96. Now, what they're doing here for just for this Labor Day weekend, if you one of the first 10 to sign up for this, you can get a 2-week trial, and then you can then you have a decision not to stay with it or not stay with it. But you'll get a 2-week trial. Now I don't know how many alerts there's going to be in the next 2 weeks. I can never tell, but there'll be some. There'll be a few, and at least. So that's how you do that. All right, and if you're looking to sign up for this, by the way, in the chat box here, there's the links are there. If you go in there, there's links to all of these specials I'll be showing you. You can get into every single one of those things, right? You just click on that, and Rory will take care of you. But anyway, the first 10 people that will get a 2-week free trial. We've never given away a free trial in the alert service itself. I mean, I think the results speak for itself, but they're doing this for a Labor Day special, and that's fine. I expect I'll have a lot of people in there. Come on Monday. It doesn't really, the alerts going to everybody. They're all fairly liquid. There's no problem with that. But this is going to end on Monday. So there's your special on the Compass Alert Service. This is pretty. I think this is really very, very generous. On the trading room itself, it's 50% off. You can get a full year for $11.98 of the trading room, monthly for $148. Now remember, in the trading room, you don't have to be there all day because of these SPY super system trades now, but you can come and go as you please. You don't have to be there all day long. But if every trade that we send out in the alerts, every trade we talk about, but inside the room we do a lot of education. I mean, I'm on there all day, and a lot of the members will be posting trades that they're taking or charts that they like, and I'll bring the charts up on the Compass system, and then I'll bring them up on TC2000 and go over all of the technicals on them to let them know what I think about that particular trade. All right, so that's the trading room. If you do want the Compass trading system itself, which is the software that looks exactly like what we saw back there, you're going to get a bunch of scanners. You're going to get the sale ends this Monday, but you're going to get my entire workspace. It's going to look exactly like mine did on here. All right, so $12.49 a year, quarterly for $5.98, and again, it's a pretty big savings. And again, this is what it's going to look like. It's going to have all all of these particular indicators on here. Your chart's going to look exactly like mine. It's going to include the scanners that come with it. All right, so those are on the chat box. They get a drop down in there for any of these particular things that you want to take, if you want to sign up for any of these. If there is not a trial period for the trading room, no, Sarah. The trading room is there's everybody who comes in. If I have a tryout, they have to remember I've got a lot of folks in there. So if people are coming in on trials, the problem is for me, I'm trying to trade, find trades, manage trades, and educate folks going over all these trades. And so I'm answering a lot of questions all day long. And it's going to deteriorate the quality of what I can do because of that. So no, we don't. They do give you $148 for a month to try it out if you want, which is to me it's not really long enough time to test it, but you can do that if you want to. But no free trials in the room. All right, and there's the Compass system again. Again, all of these are in the chat box. This 2-week trial now on the alert services, and you'll be in the room for a month too at the same time, so you get to try out the room for the 2 weeks. Let's see, like a replay. Yeah, you'll get a replay. Rory will see that. Anybody who signed up today will get a replay of this video. All right. I'm sorry I went so long. It was I kind of get wound up on this stuff sometimes with options and with the SPY super system. But I do want everybody to be aware of how much has value there is in the room and on the alert service, and what we do, because it's really, to me, to have a room where somebody's there most of the day. I take lunch, that's about it, and answering questions and calling out trades that are high probability trade setups and managing the trades. I wished I had that when I was starting, but I think it's really worthwhile. But those are the specials. I hope to see a bunch of folks in the room and on the alert service come next week. I think you'll be extremely happy that you did it. But I appreciate you being here. And any other questions here? I don't think so. All right, everybody. Well, you'll get a replay on this, and I look forward to talking to some of you folks in the room and on the alert service come the first of the week. Have a great Labor Day weekend. Tuesday we start up again, so we'll see everybody on Tuesday. Have a great weekend.